What different loans can you use or loan types to buy owner occupied commercial real estate, to buy the building that you want to run your business in? Well, understanding the vast array of loan options available is crucial for making an informed decision when it comes to financing that space. With the right financing solution tailored to your needs, you'll set yourself up for long term success. Let's dive deeper into some of the most common loan types and their features. The SBA 7A loans, they're loans backed by the Small Business Administration. They offer attractive terms and interest rates for small business owners. Those loans can be used for various purposes, including purchases or refinancing that owner occupied commercial real estate. They typically come with a longer repayment term and lower down payment requirements, making those an excellent choice generally for businesses looking to minimize upfront costs. The SBA also does a what they call a 504 loan. Like a 7A, it's really designed to support small businesses. However, 504 loans specifically target commercial real estate purchases and major equipment acquisitions. They provide long term fixed rate financing with lower down payment requirements. And SBA 504 loans really are a solid option for businesses looking to invest in that commercial property without breaking the bank. Prepayment penalties on 504 loans are generally higher and run longer than on 7A loans. Now, a quick note on SBA loans and SBA lenders. All SBA lenders are not created equally. By definition, all federally chartered banks can write an SBA guaranteed loan, but most are simply just not good at it. Most banks only fund a small number of these types of loans each year, not enough to be very good at it, as the process can be a bit complex. In addition, most banks are not classified as preferred SBA PLP lenders, which means that after the bank approves your loan, they have to then send it to the SBA for some governmental bureaucrat to review and re-underwrite the loan. This can make the process very painful and slow. A PLP lender, on the other hand, has full underwriting and funding authority granted by the Small Business Administration. These lenders specialize in SBA funding and can make the final approval decision without the need for feedback or delays from the SBA at all. This makes the process much more consistent, efficient, and fast, and much less painful. Okay, some additional bank loans that are available to buy that commercial real estate that you're going to occupy with your business. Conventional bank loans, this is what most people think about. They're provided by traditional banks. They're not backed by the SBA. They're going to generally come with more stringent credit qualification requirements, and they're going to have shorter repayment terms, but they can offer competitive interest rates for well-qualified buyers. With a strong financial track record and a solid business plan, conventional bank loans can be a viable financing option and do make sense in a lot of cases. We also have in the industry what we call no doc or light doc loans. Really are just loans designed for borrowers who may not have traditional documentation required. Maybe the cash flow is not being reported, or the profits are not being reported completely on tax returns just due to how the finances are structured or the way the business is operating. But you still have a need to want to buy a business. And so you can show in that type of arrangement the required amount of revenue coming into the business. So there is proof of revenue, proof of income, and proof of cash flow. And that also is attractive to certain lenders and investors, certainly not bank lenders, but others. And the terms are going to be different. Generally, they're going to want a higher down payment, and generally the interest rate's not going to be quite as favorable because there's more risk for the investor. Hopefully this helps you to understand some of the different options that are available when you're looking to buy your own building to run your business in, or maybe a second building because you're expanding your business. Now, this doesn't necessarily apply to other types of commercial real estate investment. These are for owner occupied. SBA loans are not available for investment properties, just essentially owner occupied commercial. So we're getting into non-owner occupied or purely investment play commercial real estate. There's a whole host of other options that are available.